Title: Sustainability Unveiled. A deep dive into how adopting green practices enhances a company's investment appeal. Introduction. In an era marked by heightened awareness of environmental and social issues, the adoption of sustainable business practices has emerged as a transformative force, not only shaping corporate landscapes but also redefining the criteria for investment appeal. This article delves into the multifaceted realm of sustainable business practices, exploring how companies that embrace environmental and social responsibility are increasingly becoming darlings of the investment community. The Green Revolution. The adoption of sustainable business practices goes beyond mere corporate altruism. It has become a strategic imperative with far-reaching implications for a company's bottom line and long-term viability. Investors are increasingly recognizing that companies committed to minimizing their environmental footprint and fostering social responsibility are better positioned to navigate the challenges of a rapidly changing business landscape. Cost savings and efficiency gains. One of the immediate benefits of sustainable practices is the potential for cost savings and operational efficiency. Companies that invest in energy-efficient technologies, waste reduction measures, and sustainable supply chain management often discover that these initiatives contribute not only to environmental stewardship but also to enhanced operational efficiency. For instance, a manufacturing facility that adopts renewable energy sources can not only reduce its carbon footprint but also lower energy costs, bolstering its overall competitiveness. Risk mitigation and resilience. Sustainable practices act as a shield against a spectrum of risks, ranging from regulatory compliance challenges to reputational damage. Companies that proactively address environmental and social concerns are better equipped to navigate changing regulatory landscapes. Ensuring compliance and mitigating the risk of fines are legal issues. Moreover, a strong commitment to sustainability enhances a company's resilience by minimizing its exposure to supply chain disruptions and fostering positive relationships with stakeholders. Reputation and brand equity. Investment appeal is intricately tied to a company's reputation and brand equity. In a world where consumers and investors alike gravitate towards socially responsible businesses, the adoption of sustainable practices can be a powerful driver of positive public perception. A company that is perceived as environmentally conscious and socially responsible not only attracts a broader customer base but also enjoys enhanced brand loyalty. This, in turn, contributes to sustained revenue streams and strengthens the company's overall market position. Access to capital and cost of capital. The financial implications of sustainable business practices extend to the realm of capital. Investors are increasingly factoring environmental, social, and governance (ESG) considerations into their investment decisions. Companies that prioritize sustainability are more likely to attract capital from ESG-focused investors and may benefit from lower costs of capital. This creates a win-win scenario where investors align their portfolios with their values, and companies gain access to capital on favorable terms, enhancing their financial flexibility. Market differentiation and competitive advantage. In an era of fierce competition, market differentiation is a key driver of investment appeal. Companies that differentiate themselves through sustainable practices not only meet the expectations of socially conscious consumers but also carve out a unique competitive position. A sustainable business model can serve as a potent differentiator, attracting customers who prioritize environmental and social responsibility in their purchasing decisions. Long-term value creation. Investors with a focus on long-term value creation recognize the importance of sustainability in safeguarding a company's future. Sustainable practices contribute to the creation of long-term value by fostering innovation, securing access to resources, and positioning the company as a responsible corporate citizen. As investors increasingly adopt a long-term mindset, companies with robust sustainability initiatives are likely to enjoy sustained investment appeal. Measuring sustainability performance. To gauge a company's commitment to sustainability, investors often turn to ESG metrics. Environmental metrics may include carbon emissions, water usage, and waste management. While social metrics encompass factors such as labor practices, diversity and inclusion, and community engagement. Governance metrics evaluate the company's leadership structure, ethical practices, and transparency. Investors use these metrics to assess a company's overall sustainability performance and make informed investment decisions aligned with their values. Conclusion. The adoption of sustainable business practices is not merely a trend, it is a fundamental shift that is reshaping the investment landscape. Companies that embrace sustainability are not only fulfilling their social and environmental responsibilities but are also positioning themselves as attractive investment opportunities. As investors increasingly integrate ESG considerations into their decision-making processes, the adoption of sustainable practices emerges as a crucial factor in enhancing a company's investment appeal. In this evolving paradigm, companies that prioritize sustainability are not only contributing to a more sustainable future, but are also securing a coveted place in the portfolios of discerning investors committed to aligning profit with purpose.